Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the euro currency. So yesterday euro has failed to complete the conditions that we have discussed early in the morning concerning this reverse hand shoulders pattern. And we said as to keep it valid, market should hold above the 113 area. So as you know, the 113 support actually is the agreement on the intraday charts, and if market indeed stands bullish, this retracement should be enough to form the bottom of the right arm and turn up. But instead of that, on the daily chart we see this trend has shifted bearish, and in general, guys, this price action doesn't correspond to normal bullish market. So because when the hand shoulders is forming, it's not just the pattern, it's the shifting of the domination from the bears to the bulls. And if this rally stands totally in agreement with the idea of the pattern, with its market mechanics, the too fast sell-off on the right shoulder is irrational. It's not natural for this market, because in the second part of the pattern, the bulls should control the market, and retracement here should be gradual and slow. But here we see a bit different action. So for example, yesterday it was the tail closing, and in general the setup stands really good. Even on Monday, when the market just made an attempt to show the pullback, it has failed and turned right back down. So definitely some selling pressure stands here with the starting of the reversal session. And we should not forget that here we have the bearish grabber on the weekly chart that suggests the taking out of these lows. Taking under consideration the action that we see right now, it seems that equilibrium shifts in favor of the bearish grabber. And currently, if even we do not dare to speak about a definite breakout at the downside, I would say that in current circumstances, personally, I do not want to take the long position. So currently, market still stands very close to the point that we have discussed, and actually on the hourly chart, it's a lot of doubts. Could appear it's arguable that maybe the hand shoulders will work because nothing drastic has happened yet. So market stands somewhere around the bottom of the left shoulder. It keeps the harmony, but guys, I do not like the way how market moves down here. It's too strong, fast. Pullbacks that we see stands very slow and choppy, and that it's not the action that's typical for the bullish market. So it means that although we talked about the possible reverse hand shoulders, but currently I don't like what is going on here, and I probably will not call you for taking any long position here. Currently, market actually has broken through the major 618 support as well, and it stands at the weekly pivot support one. Another reason that I do not like the situation on the euro is the parallel analysis on the gold market and the Great British pound. On the gold market, you will see a video a bit later today, but on the Great British pound, recall what we talked about on our recent video last week. So if you remember, we talked about this consolidation, because on the weekly chart, here was the bullish grabber, and we said, well, although we have the bearish setup on the weekly, who knows what will happen with this grabber. And if you would like to take the long position, try to take the position as close to the invalidation point as possible. So the bottom of this channel seems a reasonable point where you could do this. And you could see what will happen. Indeed, that was relatively safe opportunity to take a long position, because pullback here has happened, but later, as you can see, market has dropped. And our major scenario on the weekly chart with this butterfly and major COP target was just a breakout. On this background, on the Great British pound, well, of course, euro currency is different currency, but still, since they stand both in relation to dollar, and some bearish pressure still will appear on the daily chart, on the euro currency. The same story on the gold market right now. And on this background, guys, despite that this looks still nice on the daily chart, it is too much risk with the taking the long position currently. So background, the context for trading is not friendly currently for any long position. On the 4-hour time frame chart, take a look. market also has broken through the OP and through the agreement. That is just some anemic retracement here, guys. Stand. Next destination point will be the XOP is 112.46. But since this is the part of the hand shoulders, XOP is just a minor point. So we should be prepared for downward breakout, taking out to the 112 and moving to the 1185. So currently what we see right now on the EUR. The same story on the 30-minute chart. Just take a look at the pullbacks. Here, reaction on the OP. Here what we have, guys. Reaction on the OP was actually regardless cheaper to sell. That was very choppy action here, every time forming some kind of the bearish dynamic pressure. The same story we have here. That's not definitely the signs of the reversal. It's very gradual overlapping candles, deep retracements. This is definitely a retracement. And it means that, again, we could get kind of the regardless cheaper to sell here as well. So currently, guys, personally I don't want to go long. And I think that it seems that the bearish scenario gradual is taking the lead here in the EUR.